up like a rocket ship, down like an elevator. It's been a very crazy ride for hodlers and speculators on Dogecoin lately, with a enormous boost in Dogecoin prices in a very short amount of time in just the last couple weeks, and then a 25% drop in the last 24 hours. Now, all this speculation on cryptocurrencies and technology stocks or special purpose acquisition companies or non-fungible tokens should not surprise anyone, as central banks all over the globe have flooded the global economy just in the last 12 months with trillions more in new currency and credit units. But in terms of a comparison, the size of this bubble, this everything bubble, compared to the 1999 and 2000 technology bubble, we are seeing valuations of unprofitable technology companies that might never be profitable, that are either private or were dumped onto publicly traded markets in an initial public offering, so insiders could dump their shares onto retail shareholders, or cryptocurrencies with 10 billion, 20 billion, 30 billion, 40 billion, and then even recently $50 billion or close to $50 billion valuations on things like Dogecoin, which have higher valuations than many profitable companies, including the world's largest gold miner and many other profitable companies that are growing their dividends, paying free cash flow. More proof that people are gambling, people are speculating, people are chasing whatever is already in an uptrend. But there's a lot of red flags with Dogecoin. It was initially made as a joke. Elon Musk is pumping it. And I also saw recently someone who trades cryptocurrencies tweet out that 68% of the float of Dogecoin is owned by only about 100 people. So really, really crazy stuff. But the valuations, there's an argument to be made that the valuations, the bubble of this everything bubble and speculative bubble, is up to 50 times larger than the 1999 and 2000 technology bubble, because back then a billion-dollar valuation of a company that had little to no revenues, that had no hope of profits in the near term, maybe ever, a billion-dollar valuation of a unicorn, that was a very big deal back then. Now, valuations of many billions, 5 billion, 10 billion, 20 billion, 30 billion, even 40 billion, sometimes even 50 billion for a company that is going after total addressable market, as Jim Chano says, that may never be profitable or might not be profitable for 10 years or 20 years. These companies are getting these insane valuations priced in immediately without any hope of profit. Some of them barely can grow revenues. So that is how nuts everything is right now. So the speculative fervor, the gambling, I hope some of you took some of your profits on Dogecoin and some of these other cryptocurrencies. Just remember, though, to set some of your trading profits aside for the tax man. That's a big mistake that many cryptocurrency traders did not adhere to in 2017, the last cryptocurrency bubble that popped after a lot of cryptocurrencies, including Bitcoin and others, went up enormously and then crashed. People took profits on Bitcoin and other crypto, and then they did not set any of their capital gains aside. They went and gambled on other crypto, lost their capital gains on other crypto, and they still owed the IRS, if they're an American citizen, an enormous tax bill. I was seeing just horror stories about that. So if you did cash out on some of your crypto earnings and set it aside to buy a house or a nice purchase like that, congratulations. But in my opinion, the best way to beat stagflate tax lie, besides having good inflation hedges like physical gold and silver, real estate, and farmland if you can afford to do so, is also growing your income. And one of those potential ways to grow your income is trading stocks or trading stock options or trading cryptocurrency. But I think the mistake that a lot of these people make is they don't pull profits out, and then they don't invest any of those profits into setting aside physical gold and silver, or potentially, when things are better in the next couple of years, buying rental properties that produce income, or looking at buying a business or growing a business or starting a business that can grow income and boost cash flow. And so that is just another way to potentially grow income. So if there's going to be insane casino bubble markets with potentially 50 times the valuations. And like I said, there's an argument to be made, especially in certain cases, that some of the valuations are 50 times what they were in the 1999-2000 technology bubble. And not all the valuations are 50 times, but a good amount of them are 10, 20, 30 times what the valuations would have been back then. So that just shows you this fiat currency and credit Ponzi scheme that these central banks have done is just going orders of magnitude crazier. The last 10 years have been nuts, but things the last even couple years keep going up at steeper and steeper upward angles. We are into that hockey stick slope now, especially with the budget deficits that the US federal government is running. They have gone from only a couple years ago of about $1 trillion budget deficits up to $4 trillion budget deficits now in only a couple years. So there will be hell to pay down the line, but by the time we get there, there's going to be a lot of volatility trading profits to be made. I just hope some of you are smart enough to pull your profits out and diversify them into safer things that could potentially not go to zero, or that government could change the rules on and tax them or ban them. Because central bank digital currencies or government crypto are coming to all or almost all major economies over the next 3 to 5 years. However, a lot of you believe that this is going to happen over the next couple months or in a year less. Let me assure you that for the most part, this is not the case unless some miracle happens or these things are rushed out without any testing whatsoever, making an even larger mess of things. Because as of right now, there is basically no testing for cross-border payments. There's only tiny little pilot programs that the Bank of International Settlements and a few other world organizations are running, and this is nowhere near the scale that things need to be for global trade. Now, the Chinese are the furthest along. They are doing a good amount of scaling up inside their domestic economy in their major cities, but for many other governments and countries and major cities, this is not the case. So for those of you that think this transition to government cryptocurrencies and central bank digital currencies is going to happen very, very quickly, we're still not at that stage yet. So we need to see more proof that the scaling up, the pilot programs, the testing is advancing. So things are advancing, but nowhere near the levels to where things are ready to roll out in the next couple months. I don't even think China is ready to roll out in the next couple months, as you can see by some of the updates that they've been putting out in just the last couple weeks. And in the last month or so, the Bank of International Settlements had a number of their experts that are focusing on this put out a research report talking about that while there is progress being made, it is still nowhere near being able to settle enormous amounts of cross-border payment settling. So yes, in 3 to 5 years this could change, but in 2 months, 4 months, 6 months, we are nowhere near those levels unless something drastic were to occur. But that doesn't mean that governments won't try to tax or ban cryptocurrency outright. As of now, here in the US, they are allowing cryptocurrencies to go up, but the tax man is going to be taking probably larger and larger cuts of capital gains taxes and other taxes on private crypto. But I really don't see governments willing to voluntarily hand over their currency monopoly to the private sector with cryptocurrencies like Bitcoin and others.